All right. So breakdown. Now, I did not necessarily have a specific topic for this week, but if I had to think of one thing, then this is the one that came to mind. And it was bank holiday right there, surrounding days. That was what I've written down. And then afterwards is also the more confirmation. Wait for the consolidation to be over to then get involved. So the dangerous part, what the dangerous part can be, is that if we do not wait for enough confirmation, we might get caught up in a consolidation, and afterwards we can look to continue higher, like we're seeing on the dollar, for example, right here, where we first get somewhat of a fake move right there, and afterwards we consolidate a little bit, and then we continue higher. Now, if we get caught up in a consolidation like this, or we take a loss at the beginning right there, then we might take two losses before we take one winner on this right side right here, which of course is, mathematically speaking, not great, because then we have two losses, which adds up to minus 2 RR. Then we take one winner, which might add up to, 2 RR profit. Then we're at break even for that week, whilst that could have easily been a winning week as well. So finding the proper confirmation and finding how long we need to wait actually before we can get the real move, that's very important. And I think that's an important topic for this week. All right, let's see. For the dollar, let's first go over the economic calendar a little bit. Monday we had US dollar news, so throughout the whole week we had US dollar news essentially. Then we also had some Australian dollar news, some crosses news, etc. Now I mainly want to look at US dollar news. Then on Wednesday we had bank holiday right there for the US dollar, which is quite important to understand, because a bank holiday in the middle of the week is something we need to take into account. And the reason why that is because the surrounding days will also have less volatility. And the reason why that is, well, basically the reason why anyone in a corporate job or any 9 to 5, if they have a holiday coming up, they might take an extra day off, and they might turn it into a long weekend. They might turn it into a whole week off, essentially. And it's the same what happens in banking. So that's what we have to take into account right here. Now, on Thursday right there, we get US dollar news again. Then Friday as well, we get US dollar news right there as well. So the main importance is to understand, we need to have really good confirmation. We need to wait for the proper confirmation before we can actually look at something as well. All right, then I want to go over the following things right here. The dollar fails to follow through, lack of volatility. That's the first thing that I want to go over. So what could be a first sign that we want more confirmation? Well, if we take a look at this scenario right here, then the week started with this down candle right there. So that is this down candle right there. And that down candle creates a very small fair value gap right there. So if we look at the potential that it had the potential to create a fair value gap as big as this right there. But it only left about, is that even 10%? 10% of the potential fair value gap right there, which creates a very small daily fair value gap. Again, from the spring enrollment video, I'm not sure what the video name is actually, but when we push lower, or the retracement determines the confirmation. It was something like that. That was the topic of the video. And when we create a very deep retracement right there, we can also expect to require more confirmation. And the reason why that is because when we have a deep retracement right there, we will most likely push lower a little bit before we actually start to continue higher again. So that's where we need to require more confirmation. Now on the 4 hour, I mentioned right here, and on the daily, on the dollar, we could see this 4 hour value gap right there to continue higher off of. And that's exactly what I want to see. A 4 hour value gap which we could continue higher off of. Now we did not get that in the other Forex majors, which is again important to understand, because we both need to have the dollar ready to continue higher, and we need to have the Forex major as well to continue higher, of course, or to continue lower. Now here, eventually we do not follow through right here, which then there should be a lot of alarm bells going off in our mind and say, oh well, this is very suspicious right now. Let's just give it a lot more time right here. And afterwards on Thursday, we do decide to follow through again. And most importantly, we run this high right there, which of course turns into a fair value area right there to then continue higher off of towards the next target right there. And we can simply look again to continue higher. So it's important to understand right here, at the beginning of the week, we don't necessarily want to immediately jump to get involved right there. Wait a little bit, wait until we might have the consolidation, wait until it's over right there, where we get new fair value gaps going higher again. We have the volatility, the bank holiday is behind us, so we don't really have to worry about that anymore. And then we can look for higher prices again. That's very important to understand. All right, then if we take that understanding with us and we take a look at the indices, for example. Let's first go over a question as well. Let's see. Dollar reached drawn liquidity on Friday and EU not. If the dollar reached drawn liquidity, are the IDs in EU also valid and on other majors in EU and in US dollar JPY with a clean 4-hour value on Friday where we continue higher? Yeah, overall, it's still valid to look for that small amount of price action. So if we take a look at EU, for example, it's still valid for me to take a look right there at the drawn liquidity to trade towards it as well. But keep in mind, on a Friday, if the dollar reaches that drawn liquidity right there, it might not have a lot of volatility left to also make a new push higher. So can EU actually continue lower right there towards the drawn liquidity at the end of that Friday? That's something we have to take into account. And then I would argue, well, that's not very likely right there. So keep that in mind, if that makes sense. I need a holiday. Perfect. All right, let's see. All right, the indices I've marked out right there, ST high. And that is an important topic that I want to go over. And we go over a little bit in the fake top video. So the previous video on the finishing touch month as well. And Russell is, again, not necessarily something I want to go over. It's just a consolidation right there. But mainly ES and NASDAQ right here. And the ST high that I'm talking about is this high sitting right there. And why it's quite important to understand the overall volatility that we retrace with right there. Now, what I mean by that is we are at an all-time high at this moment in time. So when we are at an all-time high, it's very important to understand we don't necessarily want to look for shorts right there, because either we're going to try to chase price or we're going to try to call a top in the market. Both of those things are very dangerous. They will lead to a lot of losses in the market. Now, how can we confidently take shorts? Again, this is also where we would need a little bit of experience for sure, but I do believe it is, we can see it as well, even without a lot of experience. And if we take a look at this scenario, we have this daily fair value gap right there, which we could potentially trade back towards. Now, just the daily fair value gap alone, that's not enough, right? I would not trade, for example, towards this daily fair value gap right there. That's not enough to trade towards, just a daily fair value gap alone. Okay, then on the 4-hour, we also have, like we discussed in the previous finish touch video, we have this fake top right there. Now, the main important part is that this fake top right here creates a fair value area right there. And when we create this fair value area, ahead of equities open right here, we see a very big expansion phase candle right there coming back into that fair value area. Now, that is important to note, because that right there could be a very early sign that we want to create a sharp turn right there to actually continue lower for a little bit. At least deliver into the daily value gap, disrespecting the daily fair value area, targeting the fair value area low right there. So if we now go into a 1-hour, for example, then right here we see we never respect this fair value area high right there. We create fair value gaps coming back into it. The momentum is still bearish at that moment in time. So when we see something like this, this is exactly a good moment to start looking at shorts right there, because now we have a lot of momentum going for it right there, and we are disrespecting the fair value area. All these things start adding up, and we are essentially trading the early signs of a sharp turn, a higher time from sharp turn in the making right there. So the way we can spot this is, again, by having that lot of volatility, creating a big retracement right there, coming back into the fair value gap right there, fair value area, sorry, to then continue lower and target lower, targeting this fair value area as well. And this is the exact same thing that we also saw on, for example, ES right here. So if we take a look at ES, we also had this daily value gap. It's this gray box right there. Also fair value area right there on the daily. Now on the 4-hour, we saw the exact same thing. There it is. All right, on the 4-hour, we saw the exact same thing. A lot of volatility coming below. Then on the 1-hour, exact same thing. On the 15-minute, eventually, boom, exact same thing right there as well. And that is, of course, a very interesting move that we could capitalize on to continue lower. Let's see if we have any questions about that as well. How to trade the NQ unusual context, i.e. example entry. So if we take a look at NASDAQ right here, once we see this expansion phase right here and we get the unusual context, then it becomes sort of a lucid entry. So what I mean by that is we either need a 4-hour unusual context, 1 hour or unusual context, or usual context in both those days. So on the 15-minute, we can already dive into the 15-minute, either find any fair value gap that we can continue lower off of, or we can just, because at this moment in time, we might still see somewhat of a rejection to continue higher. So we can still wait. We can either wait for a new expansion phase candle or wait for this rejection candle off the fair value gap to then continue lower off of that, essentially. If that makes sense. All right. Let's see. What is this? All right, perfect. We'll get to that. Australian dollar CHF is actually very interesting. We'll get to that as well in a little bit. For crude oil, okay, we'll get to that as well. I heard a lot about market crash. I heard a lot about a market crash, not soon, but eventually. How do you prepare for that? Or is there a strategy to be ready for something like that? Not holding for a long period of time. So market crash, that talk will always go on. As in, people are always talking about a market crash. People are always talking about the worst thing that can happen in the market. Essentially, they are wrong a lot of the times. Essentially, so that's also good to note. Other than that, if there is something going on in the world, as in we might have a war that can start at any moment in time, then it is very important to understand, okay, the instruments, for example, the indices can also be affected by that. Then it's important, okay, we don't want to hold over the weekend, for example, because we are not sure what might happen in the weekend. We might get tagged out and not at our stop loss place. No, you just get tagged out wherever the market wants to fill you. So that's very important when you hold over the weekend, etc. in uncertain times. That's why we need to be careful. But other than that, can you prepare for it? No, because no one will know when it will happen. So it's also very futile to it's sort of like you're constantly stressing about it. Oh, we might have a market crash, might have a market crash, might have a market crash. And if it never happens, you're just stressed out over nothing, essentially. So that's about it. Good afternoon, Derek. How are you doing, sir? I guess the only thing I find conflicting with the NASDAQ 15-minute entry is that we haven't had a fully 2-candle rejection failure on the 4-hour and 1-hour busy fair value area. Yeah, that's very true. That's very true, and I can see that as well. And my argument against that would be is we have early 2-candle rejection failure. So it's how can we capitalize on it early? Because when we have a candle like this on the 4-hour, for example, and even the 4-hour right there closes like this, it's very unlikely that even if we do get a 4-hour nice 2-candle rejection to continue higher. So let's say we did have the next candle potentially either being a bullish candle like this or a down candle, then we still can't deny the fact that we have a big expansion phase going against us right there. So it's still a very early sign. If we retrace the steps, okay, how can we know a fair value area potentially wants to fill? Then this is the early sign. Then on the 1-hour, the same exact thing happens right here. So on the 1-hour, we have this candle right here. And if we want to continue higher off the fair value area, then this candle right here should have ideally already continued higher right there. Or the next candle. So the current candle that was closed as a down candle as well. So the 4-hour is an early sign that the 2-candle rejection wants to fill. 1-hour, I would argue right here, already has the sign that it fills. So afterwards, on the 15-minute, then that lines up perfectly with that idea as well, if that makes sense. But I do get what you're saying as well, for sure. It's we could argue it's a little bit lower probability because we don't have anything 100% confirmed just yet, if that makes sense. Yeah, exactly. It would need so there's two options essentially. Either it's making that move to consolidate. Okay, we might get caught up in a consolidation. We take the loss on the chin. Perfectly fine. We move on. Or we start to continue lower, exactly like that. But to continue higher of that bullish against that bearish momentum right there, yeah, that's quite unlikely. It's quite unlikely. Let's see. For example, in silver, all right, I'll keep in mind all the things we have. So if Australian dollar CHF right there, I'll write it down as well. And then crude oil, we also had one. And then as well for silver, we have one. right there. Perfect. I'll keep them in mind, and then we'll go over them in the right instrument as well. Perfect. Then we move on right here. All right, perfect. We have YM. Yeah, YM, to me, there's nothing really interesting to say, to be honest, right here. We've been consolidating right there, and well, Monday we had somewhat of an expansion phase, which we mentioned again, because at the beginning of the week, we mentioned, okay, can we continue lower? Well, that's quite unlikely if ES and NASDAQ also want to continue higher. So here, we create a daily value gap, which we did not sting into, which we can eventually continue higher to deliver towards the weekly fair value gap right there. Which the draw liquidity is quite clear. The overall delivery is just not that interesting in my opinion, where only we could argue that this delivery on Thursday could be quite interesting, but overall a lot of consolidations with just one simple expansion higher. Not that interesting in my opinion right here. All right, moving on to DOX. Again, DOX, I want to emphasize on the fact how important it is to understand when you do want to trade DOX actively, how important it is to understand the correlations. So I actually want to clear this up maybe in a separate video as well. And DOX, if you are looking to trade London session, which for DOX is mainly 3 a.m. to 5 a.m., not 2 a.m., because 3 a.m. is where a lot of volatility comes in for DOX. 3 a.m. to 5 a.m., that's where DOX can do its own thing, because the indices don't have the volatility. The other indices, ES, NASDAQ, don't have the volatility to move anywhere. So DOX is free to essentially do what it wants at that moment in time, because the other indices don't have the volatility. Now, once the other indices start getting volatility, which is New York session, so 9:30, 8:30 a.m., New York local time, and DOX starts to die down a little bit in volatility because it has the equities open as well, but not as volatile as the other indices anymore. DOX is really reliant on that morning session, that London session right there. Now, when the other indices start taking over the volatility, DOX doesn't really have anything to say anymore. So it's very important to understand, if we are looking at ID on DOX, we need the other indices to agree. So the reason why I was not, because in any other given scenario, if it was, let's say Euro US dollar, if we had this daily value gap right there to continue lower off of, I would be jumping on it. I would be full margin shorts right there. Of course, that's an exaggeration, but the idea would be, I would be very interested in that trade. And on DOX, I would not be interested in that trade. And there's a reason for that. Because I do not think DOX can follow through right here if the other indices are not agreeing with the ID. And we saw, just like YM, ES and NASDAQ right there were expected to somewhat have bullish price action. We're at all-time highs. We can't really call that top at that moment in time. Yes, a specific time right there with a 4-hour ST like we talked about. Yes, but other than that, we can't really talk about that. So when we understand that, and when DOX is the alone survivor almost that can continue lower, well, that's very unlikely. So that's why I wanted a lot of confirmation. Also the daily value gap instead of waiting for a 4-hour. But even after daily value gap, I did not like the price action right here. The long wick that we're seeing, I believe it's specific on Pepperstone, so it did not happen on other brokers right there. But that's why it also does not follow through. So that's very important to understand. And when you do take an entry in New York session, then ask yourself, hey, are the other indices agreeing with the ID right now? So if you want to trade DOX, my advice would be trade DOX in a London session. Other than that, it's not really worth it to trade DOX in my opinion. And if we have to take into account the other indices to then trade DOX, then why not just simply trade the other indices? Is my idea. And that's also the whole process that I actually went through when I was actively trading DOX, because I also wanted to trade in New York, and then I would take into account the other indices, which eventually led me to understand, okay, I'm just going to move on to ES and then fully master that as well. Now, that is the important part about DOX right here, and that's also why a lot of times on DOX we see a consolidation, and rare times we actually follow through very nicely. And when we follow through, we'll notice there's a 2 a.m. candle right there. So it's a London session that actually pushes lower right there and follows through. All right, Australian dollar, US dollar. So Forex. Now, for the Forex pairs, I wanted to talk about mainly EU and GU right there. And if we take a look at EU and GU, because Australian dollar, US dollar right here was just honestly not that interesting. it's having a fair value gap higher. We had the fair value gap lower right there, but the dollar at that moment in time wasn't really sure what we were about to do. So we had a new move higher right there. But this fair value gap is, of course, not interesting to trade off of if the dollar wants to continue higher. Because this fair value gap right there is, well, simply said, it's bullish. And if the dollar is bullish, then Australian dollar, US dollar will not be bullish. It will continue lower. So if they are conflicting with one another, then either Australian dollar, US dollar will continue lower, or it will lead to a consolidation. It won't push higher. So that's very important to understand right there. All right, EU. Now, EU and both GU, I would argue, were quite interesting on a Friday, on a Thursday, to potentially look at a trade ID. Now, if we take a look at EU, then what do we see? We fail to create a fair value gap to continue lower right there. Does that automatically mean that we are bullish? I would argue no. Does not mean that we're automatically bullish right now. We have these fair value gaps right here. We follow through. Well, we somewhat follow through because we never create a new fair value gap higher off of that. But we do have new higher prices off of that. And afterwards, we understand the dollar at this moment in time can just consolidate. So at that moment in time, it's just simply waiting. And if we do not create this daily fair value gap lower right there, but there's no real other arguments to continue higher off of, then I would still be bearish at that moment in time. So here, we get a new 4-hour value gap to continue lower off of right there. Then we get somewhat of a messy delivery, I would argue. But afterwards, on a Friday, we again continue lower right there as well, which was arguably only the real interesting price action throughout this week right there, which happened later on in that week. And of course, it's also important to understand there's also a lot of waiting. So the thing that we mentioned right here at the beginning, more confirmation, wait for the consolidation to be over right there. Once we see new fair value gaps, new expansion phase candles to continue lower, and we have the volatility agreeing with the ID right there, that's when we can confidently say, okay, now we can actually look at lower prices again right there. Filtering process wise, I would argue there's not really a good opportunity right here. Flow trading plan, I do believe there were some opportunities right there as well. And that is very similar for GU. Now GU, there's a different component added into the mix. And what I mean by that is we have this weekly fair value gap actually going against us. And we understand this weekly value gap right there, weekly discount rate. Then we also have this daily premium rate right there, which leads to a 50-50 area, because now we're stuck between a premium and a discount rate. It's trapped order flow essentially. So right here, how can we know we are not in trapped order flow anymore and we can actually look at lower prices? The first thing to understand is if you have any scenario like this where we are coming into especially a higher time frame, right? Because the weekly right there is a higher discount rate, higher time frame discount rate in comparison to the daily right there. So this weekly value gap is supposed to be stronger than that daily value gap. So even if the bearish is bearish, and the dollar bias is bullish, and we expect a higher price on the dollar, then still we want more confirmation off of this daily value gap right there. We can't just simply go into the 15-minute, require 15-minute ST plus read. That's not enough because we're going against and we are currently respecting a weekly discount rate right there whilst coming into a daily premium rate. That's very important. So here, essentially what we are trading at this moment in time, we are trading a failure, or we are trying to trade the failure of the 2-candle rejection. So this target right there, this low is the target essentially. So that's what we need to take into account, because then the lower time frame also makes more sense. Now on the daily right here, we're essentially waiting for daily value to continue higher, which does not happen. So the failure of a 2-candle rejection is usually seen by order flow failing on the lower time frame. So what I mean by that is having fair value gaps right there, then creating new bearish fair value gaps off of that instead, and then we can actually look at lower prices right there. Now, you notice here, we never create this 4-hour value gap to continue lower right there. So it's also not something we want to trade. Then right here, once we create those expansion phase candles, we create those fair value gaps to continue lower off of. That's exactly what we would like to see. And then we can potentially get involved right there to target this low as well. The failure of the overall 2-candle rejection right there. And then afterwards, we can of course see, all right, do we close below it? Can we continue lower, etc.? Things like that as well. But that's for GU. Then I want to dive into New Zealand dollar, US dollar a bit. New Zealand dollar, US dollar. Don't really have anything specific to tell you. This is just a bigger consolidation right here. We had to move into the daily value gap, which was quite interesting right there. But afterwards, right here, we just start to consolidate and we don't have any intention for the bullish side nor the bearish side right there. So it's not that interesting. Now, US dollar Canadian dollar already has more characteristic to consolidate right here, which is also what we see. Even with the dollar pushing higher right there, US dollar Canadian dollar just does not push higher. So this to me throughout the week is also, it really needs to have extremely convincing price action, which it did not have throughout this week. Otherwise, I just wouldn't want to get involved right here. US dollar CHF. One interesting thing that I did like is right here at the beginning of the week, we mentioned, well, if US dollar CHF potentially wants to continue higher, then it can continue higher off a discount rate, right? So when we potentially expect a sweep before a sweep happens is when there's no other area to continue higher off of, only a swing low or swing high. So here we have this swing low right there, and that is the swing low that we can potentially sweep to then continue higher, to then target this high, creating unusual context. Now here we get that beautifully. We don't get the entry or anything like that just yet, but this is beautiful price action right here to create a 4-hour value gap to then target that high potentially going into next week. So again, that is overall really interesting. And again, the takeaway for that is if we do not have any other discount rate to continue higher off of, there's no fair value gaps that we are respecting, no order blocks that we are respecting, fair value area, then look at the swing lows, because oftentimes we will sweep that to then continue higher. If it of course lines up with the ID, the dollar also wants to continue higher. All right, US dollar JPY, which arguably again, like we mentioned at the beginning of the week, would have the nicer price action, and same for EU. Then on the 4-hour, that's where the main interest was. Here we consolidate a little bit. At the beginning of the week, again, it was not that interesting because the dollar also was consolidating. Afterwards, we simply get fair value gaps right there, and really only one opportunity, I would argue right there, to look for higher prices as well, which we have a sting into to then continue higher right there as well. At this moment in time, we're already quite far above the fair value area, so a bigger retracement like that, I would not necessarily expect that, especially if the dollar is also ready to continue higher already. All right, perfect. Would you say US dollar JPY is a high probability trade? The only thing that I would not like about US dollar JPY right here is we mentioned the target earlier. So what did we actually have right there? We mentioned, well, we had the target right here on the 1 hour. The term right there, okay. We can use that because it's a very long liquidity wick right there, which I do not necessarily like. Other than that, would I say it's a high probability trade on that Friday? Yes, for sure. Is it as high probability as coming back into this fair value area? Well, no, not really. But we do have to take into account right here, this is quite a far retracement to make right here if we do want to come back into that fair value area to then continue higher. And the reason why that's important to understand, because if the dollar also has a 4-hour value gap right there with a fair value area, it can continue higher off of right there. And if we do create this retracement, then what are the odds at that moment in time that we actually create fair value gaps coming back lower to then potentially continue higher or continue lower because we create bearish value gaps? So on that Friday, it does not have the time to create this retracement to then continue higher. And if it does, it's going to create fair value gaps. So it might not want to continue higher at all at that moment in time. So this to me right here on the higher time frame basis, yeah, that's a very good trade. That's a nice trade idea right here. Even on the 1 hour with the extra confirmation right there as well, this looks very good. Looks very good. 15 minutes as well. Let's look at the 5 minutes. Beautiful 5 minute ST plus re even right there. Yeah, looks very good in my opinion. Let's see. What about the sweep looking 4-hour candle back into the fair value gap, which has a 1 hour CB in it? But that all gets taken away when we do have the confirmation right here. So a sweep coming back into a fair value gap or a rejection coming back into a fair value gap, that worries me because that would require me or that would want for me to require more confirmation. But that all gets taken away when we have a 1 hour fair value gap right there going higher, when we have a beautiful 15-minute sharp turn right there, when we have very good 5-minute ST plus re right there, where the odds that we can at least go break even are very much increased right there. We then take away all the 1 hour values right there. So that only worries me to see how much confirmation we want. But we have every type of confirmation in the book. We have a perfect stick entry confirmation. We have a 1 hour ST entry, which is also more confirmation than usual. of that 1 hour ST, we have this 1 hour stick entry of the 1 hour ST. So that's even double the confirmation then to continue higher. So that whole idea of that 1 hour gap going lower right there, that's valid, but it gets taken away as soon as we get the more confirmation. Also, is this a deep retracement in 4 hour where we need more? Yeah, exactly. So the JRX mentioned it perfectly right there. That 1 hour value gap right there, it's good to note, but it's good to note for how much confirmation we want. Exactly. So on the 4 hour right here, we do want more confirmation of it. But once we get every confirmation in the book, choose one to enter off of essentially. Deep retracement is a bit objectively for me how I handle that. Objective or subjective? As in, here, yes, we could just look at more confirmation as well. Good questions. All right, then let's move on to the metals as well. Let's see what we have right here. We also had a question regarding this. Let me see. All right, Arjo, quick question. If you have a high probability trade and you want to execute, but you can't reach 2RR to a context high, your 2RR gets reached over the context high. In that case, what I want to do, that's still perfectly fine for me, but there's a few things that I want to take into account. So I'll first go over silver right here, and then I'll go over as well how I would do that. Silver, we've been consolidating right here, and nothing really has changed. What I want to emphasize on again is the when we do get a move higher like this, it again does not necessarily mean that we all of a sudden are bullish, because it happened before, right, of the same weekly fair value area right there. So it's very important to understand that this move, even though we get the move, still low probability. And otherwise the market keeps on tricking us, and we just need more confirmation. So what is more confirmation than just that expansion phase candle, having a fair value gap right there, we have a sting into that, so then a stick entry, for example, off of that, then we can look at high prices off of that. Otherwise, we're just simply repeating those mistakes. That's very important. Now, on the 4 hour right here, if we, for example, take this, which was quite interesting, by the way, this fair value area right there, and fair value gap as well, to sting into, to continue higher off of. If we have our context high, which is this one right there, and let's say we have our 2R way above that high. All right, let's see. Let's say the entry was here. Again, don't take into account it's not an ST plus RE or something like that. I'm just doing it for the example's sake right here. We have the 2RR right there. Then the only reason why I would take this, or the only reason why I would target still that 2RR, is if we have no resistance towards the next premium rate towards the left. So what I will look for is above this high right here, do we have a no resistance towards the premium rate to the left? Meaning, it's the next target, for example, right here. This is the next fair value gap right there that is unmitigated that we can still reach for right there. If that's the case, then I would still believe in this run that we can actually look for higher prices as well. So if we take a look at that, do we have anything? And I'll start on the 4 hour. We have this 4 hour value gap right there. When did we sting into that? There's a left right there. So that's not looking very good, because then we have right here this 4 hour value gap, which is essentially this area is then the next no resistance run. Again, we can still take this as long as we can go break even. So can we go break even at that moment in time? Yes, we can go break even quite early on. Even if the entry is higher right there, we can go break even as soon as we take out that high right there. Because even if we want to continue higher, we should now respect this fair value area right there. So we don't expect a big retracement. So that's the first thing. The premium rate towards the left right there, the resistance, the next resistance area. The second thing is, okay, can I go break even earlier? And as well, essentially take the risk off the table. That's the most important part, because we can still take those trades. And even if it's above this 4 hour fair value gap right there, as long as we understand, okay, after it wants to retrace likely towards the fair value area right there, we can then continue higher off of that. So that's where we need to take our stop loss into account right here, because, or our entry essentially, because if we enter like this, yeah, this is not a good entry. But before that, now we can go break even actually. And it's quite interesting actually, because we can go break even. There's no reason to retrace anymore towards our entry level, etc. So there's risk off the table quite fast. And that's our goal right there. So hopefully that answers your question as well. The US bank holiday was last Wednesday. Wednesday, right there. Yeah, exactly. Let's see. Is that Australian dollar CHF, I believe? Or, oh no, Australian dollars, New Zealand dollar right there. Yeah, we'll go over that as well in a little bit. Let's see. All right. So for the metals, we can quickly go over gold as well, right here. Other than that, nothing really different. It was overall just a bigger consolidation. We had just this fair value gap right there, which if we wanted to run the high, we could continue higher. This is the next resistance area right there. And we see we don't follow through anymore. We get a big rejection lower right there. So it's overall not that interesting in my opinion. Bitcoin, very similar. Not that interesting in my opinion. Don't really like it. It's just consolidating. It's somehow continuing lower right there, but now with a lot of intention, which is quite odd. All right, crude oil. Now here we also had a question. Let's see. What do we have? Do you see any way to get involved on the Thank God Friday setup for crude oil yesterday? Entering on the 15-minute sharp turn after the sweep of the previous day high seemed a bit premature, so I stayed out. Let's see. So if we start off with understanding the story on crude oil, we were essentially waiting for a clear discount rate. Crude oil was arguably one of the nicest instruments to trade throughout the week because it had such a clear drawn liquidity in the form of this high right there. The fair value area getting disrespected, everything that we had, unusual context, it's perfect essentially. Now on the 4 hour, we got this 4 hour value gap right there and this 4 hour value gap right there as well and the fair value area. So why do we now look at higher price off of this 4 hour value gap and why don't we wait for the 4 hour value area right there when we disrespect essentially the first 4 hour value gap right there? And the thing right there that's important to understand is very similar to what we had earlier actually, which was US dollar JPY, I believe. This leads to the understanding we want more confirmation off of any discount rate that we get. But once we get the more confirmation, that's already perfect. So here we get a big rejection right there already. We are close to the drawn liquidity. Keep that in mind as well. And afterwards, on the 1 hour, we again have good confirmation overall to continue higher. Potentially the only resistance that we have is this 1 hour value gap right there going against us. So on the 15-minute, what we were waiting for is to look at, do we get a 15-minute value gap higher right there? Can we trade back into that to then continue higher? So the over confirmation essentially takes away all the doubt if we do want to continue higher off the PD rate. That's why we use the more confirmation essentially. So here we get the rejection of the 1 hour value gap, consolidate a little bit. After we disrespect this 1 hour value gap by a new 15-minute value gap higher right there, we get the retracement. And even off of that, we get a 1 minute sharp turn right there entry, which is confirmation, in confirmation, in confirmation, in confirmation. And afterwards, we just simply continue higher, which was really beautiful. It was really beautiful right there. I took the entry a little bit different because my entry was actually a stick entry, was also based on a 4 hour value gap right there. Now it was based on the following. My entry was on the 4 hour, as 1 hour, because on the 4 hour we had this beautiful rejection right there. We had a beautiful rejection higher already, which at that moment in time I knew, okay, well, we're most likely not going to take out that rejection right there unless we want to consolidate. So if we want to run and we have the volatility, we can already look at higher prices right there. Then on the 1 hour, I wanted to pinpoint my entry a little bit more. I entered right there actually a little bit later, right there, and I covered the bodies right there of the lows essentially, targeting a 2RR. And that was crude oil for the middle of the week, the trending days right there. And after we took out that high, again, it turns into a little bit of a mess because now we just need, again, that clear higher time context. Now, one thing actually that I know that I wrote down, not today, that I wrote down throughout the week is when we have an external target, every trade automatically becomes a lot higher probability. And what I mean by that is if we have a fair value area target in the form of this one, for example, the context target that we have in itself is, yes, it has a probability, but let me write that down actually to make it more clear. When we have a context target, alone. So that's oftentimes what we'll see, right? We only have a fair value gap. For example, this right here. When, well, in this case, we have this fair value gap right there. And that creates context to potentially continue lower, where the only target that we have is this recent target. We don't have a fair value area target to the left anymore. Nothing like that. Then we only have that context target at that moment in time. Now, when we also have an external target, so an external target in the form of a fair value area, for example, fair value area high, fair value area low, that basically doubles the amount of probability that we're actually going to deliver towards a target, which is something I actually want to make a whole enrollment or based around this high probability enrollment. What is high probability? What is low probability? When you require more confirmation and things like that. But that's very interesting. So for your own study as well, you can add this to the list where if we have an external target and we have a context target, so essentially we have unusual context and within that we also have usual context, it creates a lot higher probability actually on what we can look to do. Because we have a lot more certainty that after taking this high, for example, we can still deliver towards that next high right there as well. It's a lot higher probability. Very interesting actually. But that was not the question. Let's go over the question. I deleted that, the text. Okay, perfect. Let's go over the question. Thank God Friday. So was there any way to get involved? Overall, the Thank God Friday, I do like it actually. It's a fair value gap right there. We have a late two candle rejection. So if we're being picky, we could argue, well, it's also a weird fair value gap. So we could somewhat argue this is the fair value gap. It's a weird two candle rejection. But if we do look at the previous day high right there on Thursday, which overall is good. I like this. This looks good. Then let's look at the 15-minute. What do we have? On the 15-minute right here, what do we have? Sitting right there. We already get the move higher right there, and we already get a potential ST at this moment in time, a little bit earlier. Then afterwards, we do not follow through based off of that. Then after we get another sweep, the real sharp turn right there, and we actually continue lower. Now, at this moment in time, the only way that I could see to potentially get involved is not necessarily on this third candle, because here I would still be a little bit suspicious of the fact that we might actually continue higher, because it's quite a big rejection right there. So I would not want to see that. I would want more confirmation. Now, if we get a new down candle again, okay, now we do not deliver into the fair value gap. We do not follow through of the rejection of the sweep of the low right there. This in itself will be quite interesting right there. But then we have quite a big stop loss, and this is already at 11:30 right there. So it's approaching the end of the day. You can't target a 1-2, maybe a 1-1, but even a 1-1 at this moment in time is not necessarily something that I would take. So is there a realistic good entry on crude oil right here? In my opinion, no. No, this is not an entry that I would take right there. Very late during the day, etc. It's not an entry that I personally would take. There's an entry possibility. Is it a very good one? I'd argue no, not really. Not really. Let's see. Let's see. All right, then we can move on to the crosses as well. Let's see if we have a few other questions. I'll finish the list right there, and then I'll go over the other questions as well. So let's go over the crosses right here. And there was one question about Australian dollar CHF. Let me read that one really quick. In Australian dollar CHF, after tapping monthly value area market confirmed 4-hour order flow after rejecting the 4-hour breaker above market, creating 4-hour bullish candle from the 4-hour value gap on the base. I take that stick entry, but price not follow through and hit my stop loss. At the time we are in the third phase of daily candle. Yes, we have no real bottom, but we have also lack of volatility because Friday. Could this be the reason? Or my entry confirmation was not that good. So there's a few things that I want to go over right there. And I wrote down Australian dollar CHF consolidation. And the reason why I wrote that down is this monthly fair value area. This is not necessarily a fair value area that I'm looking to trade off of. That's already the first thing. As in it, to me, it's a fair value area. Yes. Is it a beautiful fair value area where I want to look for confirmation? No. And the reason why that's important to understand, because I do use it as resistance, because we might actually have a rejection right there, which we do get. But it's not something that I want to look and dive into the 4-hour off of to then look for higher prices, especially not a 4-hour ST plus RE. So here, what do we get? we sting into that right there. And let's actually see. We have the sting into it right there. Perfect. Now, the main thing that I want to pay attention to right here is that we had, if we even ignore the fair value area right here, we had a lot of unusual context right here. So this right here, the move higher, was unusual context towards that high right there. Then afterwards, we get another unusual context right there to continue higher. Then afterwards, we get to continue lower, excuse me. And afterwards, we get this fair value area as well, unusual context to continue higher again. Then we do have a monthly value area. Is it a nice fair value area? No. Is it a fair value gap? No. So a fair value area in itself is already a lot less accuracy if we don't combine it with a fair value gap, in my opinion. So here, we get an ST plus V. Now that's quite nice. And we could target this high. I do agree with the ID. But what are the chances that we are actually going to deliver towards that high right there, whilst we have been somewhat consolidating previously right there? That's not very high. How many times can we actually create that unusual context right there to then still continue higher? And that to me is not very high in my opinion. So when we do get this 4-hour value gap higher right there, it's not that interesting to me. And purely based off of the fact that we've created unusual context a lot of times. And essentially this leads to the understanding, well, both bullish side at this moment in time and bearish side are just not strong enough to push lower nor higher. So to me, it just looks like consolidation overall, and I would not want to get involved right here, if that makes sense. And what could be interesting is a daily value gap instead, to then potentially look at higher prices as well. That could be quite interesting. But even that, I would want a little bit more confirmation right there. All right, let's see. All right, perfect. Euro Canadian dollar. Let's see. I wrote nothing down for Euro Canadian dollar right here, and simply based on the fact it just delivered lower eventually, but we had this swing low right there where we create a fair value gap. Again, study that. It's very interesting because those swing lows or swing highs, that's oftentimes where the catalyst to create those fair value gaps. Same here. This swing low, the catalyst to create this fair value gap to potentially sting into it to then continue lower again. Now we create a very small fair value gap, and afterwards, in hindsight here, it looks like a perfect delivery, a very nice delivery, but it's a very small fair value gap. I would already want more confirmation of that. We consolidate for a very long period of time, and eventually we just have the delivery on a Thursday, whilst stinging into that fair value gap on a Tuesday. So here, that's not that interesting to me. Not that interesting. Messy delivery with overall still quite a clear drawn liquidity. All right, GBP JPY. Let's see. Saw a question about that as well. GJ was a super nice example on Friday to wait until your discount rate gets hit before targeting the highs. London purely manipulated into the 4-hour gap to explore New York. Yeah, that's very interesting. Very interesting. It's also something I wanted to touch on right here. So what I've wrote down is GBP/JPY, messy but clear drawn liquidity, because throughout the week, I do believe right here, we never get that bearish intention. We don't follow through off those bearish value gaps, and we get that bullish intention again. Now, the delivery is very messy, but there is a delivery. As in, we have a clear drawn liquidity right there in the form of that high, in my opinion. The only thing here is that we never really create a very clear discount rate that we can continue higher off of. So the only thing that we can do is essentially wait for this 4-hour value gap, because that's the only discount rate that we have. Wait for a good confirmation. I would argue more confirmation than usual, because it is, again, not a very clear discount rate to continue higher off of. And afterwards, wait for the proper confirmation. Once we have the proper confirmation, for example, the 1-hour value gap, quite interesting, right there. Once we start to create expansion phase candles right there, yeah, that's perfect. That's absolutely perfect. And then eventually we deliver towards the highs on that Friday right there. But overall, clear drawn liquidity, messy delivery. And in messy delivery, it's more important to understand patience. And that's the same with the dollar, for example, because we require more confirmation right there. You need to have patience in messy delivery when the drawn liquidity is still very clear as well. It's very important. All right, then I've written down GBP Canadian dollar, but let's first go over Canadian dollar CHF as well. Canadian dollar CHF, again, here, not that interesting. We just have this daily value right there that we disrespect, and then we create unusual context to target that high right there. So the difference, if we look at this, for example, in comparison to something like what did we have earlier? Australian dollar CHF. then here we do not have those consolidating factors. So I would trust this a lot more to actually follow through towards that unusual context high right there. Because it's still in somewhat trending conditions. It's just switching the trend, where Australian dollar CHF is constantly switching the trend. So it's not making up its mind on what it actually wants to do. All right, then Euro CHF. Let's see. Also, we had a daily value gap, which I wanted to see a stinging to at the beginning of the week. We never got that. Follow through lower. Then we reached the target right there for our value gap, which is again not super high probability because we reach the target, then coming back into the 4-hour value gap, or more confirmation, etc. Don't follow through. Continue higher right here. And afterwards, we deliver into the daily value gap. Overall, not a nice price action. And we also have this weekly fair value gap right there, which we can potentially continue lower off of next week. So it's quite interesting that we create, again, weekly value gap off of those weekly resistance areas. GBP Canadian dollar. Perfect. Now, I mentioned right here a story. And what do I mean by that, a story? There's a story to be read right here. And if we read the story, understand somewhat of the story, I do think right here, this was also in the list, maybe not the highest probability, but it was definitely up there as in high probability trading ID right here on GBP Canadian dollar. And what I mean by that is, let's start off with the fact that we have a target right here that we reach from the left. Again, that's resistance, right? I'm just purely marking that out to see how we react off of it. I'm not expecting lower prices off of that initially. Well, matter of fact, I was actually looking at the higher prices right there. So I was just expecting higher prices. That's just resistance that we have to take into account. But once we get such a big rejection of that resistance area right here, and afterwards we get this fair value gap lower coming into this fair value gap right there on the daily as well, then this is 50-50. But we do know right here that we now have a fair value gap going against us. Even an expansion phase candle, that's already tells us a lot right there, that we have a lot of bearish momentum at that moment in time coming into this fair value gap. So, going back to the more confirmation, is this fair value gap very likely, very high probability to hold? Well, if it does want to hold, we want to see more confirmation at least. Then afterwards, we get this fair value gap right there. We struggle to continue higher. So even on that Tuesday, whilst not coming into a pre-area or anything, we struggle to actually push higher right there. And after we come into this fair value gap, bearish value gap, we have a perfect rejection on the 4-hour. The only thing that I would argue is not perfect is that we quite struggle to create a fair value gap continuing lower right there. We consolidate for a little while right there. It's the only thing that I could see right there. That's not that good. But afterwards, once we start to continue lower again, we start to create new expansion phase candles, start to even on the 1-hour, create new value gaps going lower as well. And that's looking really, really good to at least target these lows right there. And to then afterwards, create that full unusual context towards this low, external low right there. And again, it comes back to the fact what I mentioned on crude oil. When we have an external target and also a context target, so we have this and then also an external target like that, makes it a lot more interesting, in my opinion, for a trade ID as well. So that's essentially the story, which, in my opinion, again, is it the highest probability? No. I do believe crude oil, for example, a lot higher probability. Is it a high probability and definitely a good trade ID? Yes, a good trade ID, in my opinion. All right, then we have New Zealand dollar JPY, and afterwards I'll dive into the questions as well. New Zealand dollar JPY, very similar to GBP JPY. Again, to me, GBP JPY was more interesting than New Zealand dollar JPY. But here, it has a quite clear drawn liquidity, as in we can deliver higher towards the target that we have reached. What actually is that? It's a swing high right there towards the left. Now, that is quite a clear drawn liquidity in my opinion, but the overall delivery was just not that clear. It just wasn't very nice in my opinion. So if we can find it, perfect. On the 4-hour, what do we see? Right here, we get quite a few 4-hour value gaps higher as well. The two-candle rejection is very, very lackluster again. And what I mean by that is it's not perfect. It's not stinging to it to then continue higher, etc. Things like that. Here we have this fair value area, which is quite interesting. But we do have a 4-hour value gap going against it right there, which we are also respecting at the beginning. So it's really only interesting once we get expansion phases right here. But even that is quite a messy delivery in my opinion right there. So overall, yes, it delivered. It had a quite clear drawn liquidity, but delivery was quite difficult right there as well. All right, perfect. Let's see. let me go over the questions as well. If you are trading a 4-hour context area, is 1 hour and 50-minute opposing resistance a huge deal for entry, or is resistance only taken into account on the same time frame or time frame above? Well, if we are talking about let me put it this way. When we have 4-hour context area and we have 4-hour resistance, I would want a lot more confirmation. If we have 4-hour context area and we have 1 hour and 50-minute opposing resistance, that's not a big deal for me. And the reason that's not a big deal for me is then I take that resistance into account for my entry. So where I want to enter. I want to either enter before we reach the resistance or after we get a rejection of the resistance to get a more accurate entry, essentially. But it's not something where I would say, oh, now I don't want to take the entry anymore. No, it's just to get more accuracy, essentially. That's how I then use it. But the main resistance that is important is on the same time frame as your context area. When you have that going for you, yeah, that's very suspicious. Do you see any other high probability setups this week other than crude oil? Yeah, for me, I would say GBJY, New Zealand dollar JPY, are they extremely high probability. I would argue they are a little bit at the bottom of the list, but they're still up there with high probability, but definitely at the bottom. GP Canadian dollar was high probability, in my opinion, was a nice setup. GP Canadian dollar, crude oil, yeah, that's about it. That's about it. But crude oil was the highest probability, in my opinion. GP Canadian dollar is definitely up there as well. It's above GP JPY and New Zealand dollar JPY as well, in my opinion. And afterwards, not really. If we talk about flow, we might have something like EU and GU on Thursday. But other than that, not really. US dollar JPY, but that's about it. Let's see. Check Nifty. I also took a thank God Friday trade on it a little early, but it worked out fine. Let's see. Nifty. Let's see. We have this high right there. I would argue it's not a. We are mainly trading off of a swing high right there. That's something to note. So it's a swing high right there. It's not a thank God Friday setup, if that makes sense. On a 50-minute, we do get good confirmation off of that. Again, it's a little bit low confirmation, and the reason why I mentioned that is because when it turns into a swing high, it's now a 50-minute ST plus re area. But when it's a previous day high, it's just a 50-minute ST essentially, because it's previous day high is the same as a 4-hour swing high essentially. So if this, for example, was the entry, it's a good entry. I like the entry, but again, keep in mind the overall ID that we mentioned before. It's quite nice, quite interesting. I think this was one of the cleanest trades for this week. 4-hour value gap narrative out of monthly value gap and no resistance liquidity run. Let's see. That is Australian dollar, New Zealand dollar. Then on the monthly, yeah, the only thing that I did not like is the monthly value gap is essentially used up, right? So the only thing that we're working with is the previous month's low right there. Which is quite interesting, the previous month's low. That's still quite interesting. And on the 4-hour, we had, it took a while right there. Yeah, on daily, I can see the expansion phase candle right there to continue higher. Just on the 4-hour, it's quite a random fair value gap in my opinion. But if we combine it with the daily understanding, daily right there, daily expansion phase higher, perfect. We're close to this drawn liquidity right there, even that fair value gap higher up. 4-hour fair value gap right here as well in the mix right there. Yeah, that's perfect. That's very nice. That's up there, definitely up there with a high probability. The highest probability, I would argue, not necessarily, but definitely high probability because it's a very clear drawn liquidity, only discount rate that we can continue higher off at that moment in time. Yeah, that's very nice. Interesting. Reached the fair value area on crude oil. Very interesting. Crude oil right there on NYMEX. Let's see. Which one do I also use NYMEX actually. Perfect. All right, what's your opinion on people saying that trading is one of the hardest professions out there? How would you compare the struggles you need to go through in trading, the hours of self-analysis, etc., the other professions, caveats? A lot of people DM and mention psychology, so I would love to see active discussions on it in live sessions as well. Don't be scared, guys. Yeah, that's a good topic as well. And I would also argue it is one of the hardest professions, and I do very much agree with that as well, because you need to go against essentially human nature. There's a lot of things inherent in your brain which are already set, and you need to go against it. So that's why it makes it one of the hardest professions. Technical wise, psychology wise as well, I would say most people make it very hard upon themselves. Most people, even in the mentorship, if we're being very honest, how many people actually finish the videos? How many people actually take notes on the videos? How many people actually follow through them based on that knowledge? Yes, there's people, but a lot of people also don't do that. So, and that goes for a lot of things. And it also takes just simply discipline. And again, I always mention becoming profitable is quite simple, because the path to it is laid out already. It's quite simple on what you need to do. I can make a video, okay, follow these videos, simply follow the spring enrollment, do this, follow the homework, do what I say, and eventually you will be profitable. But the hard part is, and why it's not easy, is sticking to that and not getting your mind, well, not the mind becoming the better of yourself. As in, what I mean by that is the mind takes over, and the mind says, well, maybe this other strategy is better than this one, maybe this is better than the other one, and then ends up in a shiny object syndrome cycle, and then it becomes very hard for yourself. So that's why it's so hard. It's quite simple, but it's hard at the same time, because people don't stick to the same thing, and they don't actually follow a certain path. They don't put in the work. They don't have the discipline to actually follow through. That's why most don't succeed. So, and that is of course dependent on the person itself as well. So when it comes to psychology, it's essentially the same. And what I see a lot of times is as well repeated mistakes. So again, traders make it very hard for themselves. If you constantly repeat mistakes, you don't learn from the lesson, you don't try to actually overcome that psychology obstacle by trying again, but being aware of it, that's already the first step, then it just keeps on repeating. It becomes repeatable mistakes. And for example, just to name an example, we had someone mention in the MMT, in the chat, I believe it was last week, and it's not to it's not to personally blame him or anything, but it's just to show you what most traders are like. Is he mentioned, I blew about 13 challenges right now. Okay, why did you blow 13 challenges? Do you actually learn from your mistakes? And then the recent challenge that was still failed, the 13th one, is still, I'm overtrading and I'm revenge trading. Well, what did you do in the past 13 challenges right there? It seems like you haven't really learned from the mistakes, or you're repeating the same mistakes. And that's like a donkey hitting the same stone over and over and over and over and over again. It's oftentimes it's also logic. So I believe a lot of traders make it very hard upon themselves. I can tell you what to do, but if you don't follow through on it, then I can only do so much. And that's why I believe as well, trading is one of the hardest professions. There's some nuance to it, I believe. That's very important. And again, there's nothing against the guy who was failing 13 challenges, because I also believe I have a lot of responsibility in that as well. But I can only help so far, and that makes it oftentimes quite frustrating as well. Good morning. The one missing thing with your trading is one-on-one call. I have questions and suggestions that I would prefer to keep private until. Would that be something and your team would consider? Currently, no. We have done it in the past, but that was when the MMT was a lot smaller as well. When I simply had the time as well to do one-on-one calls. Other than that, we are looking here and there to see if we can have someone dedicated, which you can have one-on-one calls with as well. Sort of like your trust person that you trust, that you can ask questions constantly. We are looking into that, but of course, finding the right person who also has the time to do that, that's a little bit more difficult. But we are looking into that. But if it's really a question that you don't want to ask in the community or anything, then we'll set up as well a chat where you can ask me it in private, for sure. I joined a bit late, so not sure if this was covered already, and if so, I will watch the video later, no worries. Otherwise, can you check NQ from Friday, which in 15 minutes looks like consolidation, creating invalidating fair value gaps, applying a flow plan. Is there a high probability trade that you would highlight, and what would be the analysis to get that? But we didn't necessarily look at Friday, so I'll definitely give that a go. Let's remove the notion right here. Oh, okay, perfect. So leading up to that, we were talking about this daily value gap right there, that we can potentially reach that on the 4-hour sharp turn high that we get, the early sharp turn high right there. Now on Friday, I don't necessarily see a very high probability trade, to be honest. I see this 4-hour value gap right there, but this creates a 50-50 area because now we have this daily value gap, 4-hour value gap going against it as well. That's quite 50-50. So if we go into the 15-minute, yeah, I don't think any of these trades right here are extremely high probability. Because afterwards we also sweep this low right here. Right there multiple times even. So yeah, in my opinion, it's not very high probability. If I were to look at one thing, I would look at potentially sweep of this low right here. Fair value gap disrespected, new fair value gap higher right there. That's nice. After we get this fair value gap right there, that could have been quite interesting to target then this high right there. Could be quite interesting, but afterwards it failed, so that might have been a loss overall. But other than that, I don't see something extremely high probability. If that makes sense. Yeah, start living in New York, Est. 5:46 a.m. where I'm at. Wow. That's insane dedication, my friend. That is insane. That is insane. I woke up early. Perfect. Love to see that. Leaving this comment for the last topic on the list about the GBP Canadian dollar trade. I'm using the same template to journal my trades as I believe it was the one you sent, right? Let me check actually. Yeah, it was the one you sent. Perfect. Let's see. What are you saying? I'm using the same template to journal my trades as the one you used on the May trades review. Only thing I'm not sure is what to fill on the aligned with column. Because I find this unusual context trade a bit tricky, meaning this trade started more of the story I framed starting on the monthly time frame. For example, making a statement like initial signs of a sweep and already taking into account monthly busy below. Is that enough to consider the monthly time frame aligned? What we say are the correct time frames aligned? That's a really good question. And when I think of that, the way I have organized that notion, so the original thought process behind that was, okay, what order flow do we have? Okay, what order flow do we have aligned with that trade ID? Which on the monthly is not necessarily aligned right there, if we're being honest. Now, if we are also looking at, then we can also almost force an ID that we can write down right there. If we're purely talking about aligned with, then I would argue it's not aligned with the monthly, because I'm purely looking at at order flow in that sense. So even the weekly right here, I would argue, is also not necessarily aligned because we're trading against the overall trend of the weekly order flow right there. But what we can add is, of course, well, we have a weekly value gap that we can actually look to target right there. We have the daily agreeing with that. The monthly is also sweeping the previous month's high right there. So in that way, they are somewhat agreeing with the ID. They have arguments going for it, but they're not necessarily aligned on order flow wise. So I actually need to change, and it's a really good one that you mentioned that actually. I actually need to change that to make it a little bit more clear, aligned with order flow in that sense. So are we trading against order flow or are we trading with order flow in that sense? Let's see, what do you think about futures forex on the lower time frame? The candles don't move much. Yeah, it's very interesting. It's a very interesting topic. And if you are trading a futures account, I do believe you can, for example, take stick entries, higher time frame entries on forex currencies. So, for example, if we have Canadian dollar news for that day, we can just simply essentially do the same on just the Canadian dollar currency. But if you go into the 15-minute, let's say the 15-minute is arguably the lowest you can go, because if you then go into the 5-minute, it gets really messy right there. On the 1-minute, it gets very messy as well. So it's quite interesting, but only if we're looking at the higher time frame. So if you also want to capitalize on the higher time frame ID right here, could be quite interesting. But lower time frame, not that interesting in my opinion. I feel like it's one of the hardest professions because it's you versus you. You need to master yourself before you can master trading. Yeah, exactly. And that's exactly what makes it so hard. Yeah. That's very true. Very true. And let's see, it was, I believe, the which one is it? The trading dashboard and the data. You can also go to trade recap, and I believe I have it there. Let me know if you can find it. That's also very true. Hard because you're not guaranteed pay for your time like at a job. That's very, very, very true. Even if you're starting a different company, I would argue at a certain moment in time, once you get better at it, etc., you are going to get paid for your time, most likely. Trading is just not the case. Trading is it's the whole world in trading is upside down. Because essentially, you don't, the more time you put into trading is not necessarily more beneficial. Whilst that's also why I've mentioned in the past, find something that you can put a lot of time into, which does pay off. Because it's very satisfying if you put a lot of time into things and it actually pays off. So, for example, do something like, I don't know, think of something, but that keeps it in balance, because you have one job where I don't want to put a lot of time into, but I do have a lot of time, for example, but it does not pay off. So I also want something where if I do put the time into, it actually does pay off. So yeah, that's very important in my opinion, to have that balance, to find that balance. Work hard on your job and you make a good paycheck, work hard on yourself and you make a fortune. I like that. That's very nice. It's a good one. Also, when you're not profitable, everyone thinks you're absolutely delusional. It's just posh gambling. Yeah. Trading in itself, right? When you come into it, it's like, I don't know. Outside of people that know trading, I don't even like to very much mention it, because people just oftentimes just don't understand it. And you have to go through a 2-hour lecture to actually, okay, it does actually make sense. It's like, yeah, I just do this. Yeah, exactly. I oftentimes also think it's better to somehow keep it on the low. I don't know. For me, in my experience, when I go out and I tell people, oh, I'm planning to do this and I'm planning to become a profitable trader, oftentimes that will come back to bite me in the ass, and it will not actually pay off that well. For example, one example that comes to mind is nowadays I like to keep things very much on the low, because I know the more I start bragging, the more I start losing things. Funny enough, how that works, how the universe works in that way. But for an FTMO challenge, the first FTMO challenge that I passed actually, which was back in 2021, I bragged to all my friends, all my family, oh wow, I have a 50k account right now and I'm going to make so much money, and I lost it the next week. So yeah, that's why I like to keep things, just don't mention it. It shows for itself once it's there. Can you repeat that with resistance, 4-hour context and 4-hour resistance and 1-hour resistance? So if we have 4-hour context and 4-hour resistance on the same time frame, so essentially resistance and context on the same time frame, we would want a lot more confirmation, meaning that 4-hour resistance essentially needs to be gone before I want to look for a trade ID. But if we have 4-hour context and on the lower time frame resistance, then the resistance is purely there for me to look at more accurate entries. So I don't want to enter, or I want to enter either before we reach the resistance area or after we have reached the resistance area, not whilst we reach the resistance area. So let's see if I can find an example. If we take a look at, let's take a look at, do we have something on the EU? So talk about this context right there. Do we have anything on the lower time frame? So you'll see me, I mark out a lot of lower time frame resistance as well, even on the 5-minute, etc. I mark out all the resistance because I essentially want to, for example, if we have this resistance area, it's not the best example in the world, but I don't want to enter as we hit that resistance. I either want to enter after it, so after the rejection is done, or I want to enter before it. The main reason why it is because when we enter either before or after, there's a lot better chance that we can go break even early. When we enter whilst going into the resistance, we might still have the rejection. It's quite hard to go break even then. If that makes sense. What about Australian dollar and New Zealand dollar? Australian dollar, I believe did we touch on it? Did we touch on it? I forgot. I believe we did. So the overall thing right here, Australian dollar, New Zealand dollar, I'll recap it real quick. a month for value gap is gone because it's mitigated right there. So if we want to continue higher still, it's the previous month's low right there. That will sweep to then continue higher. Perfect. We understand that ID. We have this weekly value gap going against us. I missed that the last time actually. Then on the daily right here, once we get an expansion phase right here, above, taking out the 2 candle rejection, actually on the weekly as well, perfect. Then here we have no resistance until we reach this high right there. So this right here on the 4 hour, that's quite interesting actually. On the 4 hour value gap right there to then continue higher. But it's really the only interesting move throughout that week. Other than that, wasn't that interesting in my opinion. The only thing I have at the moment with psychology is winning streaks and losing streaks. Winning streaks are a lot easier to accept, but losing streaks less so. Particularly large in losing streaks. For people who are consistently profitable for 6 months, I'm curious whether you have had losing streaks +6 once in a while and if that's considered an issue. That's not necessarily considered an issue. And I understand what you're saying. At least I do believe that I understand. Losing streaks makes you overthink a lot more, of course, because winning streaks makes you think, well, I'm doing great and everything is going great. Whilst winning streaks in itself, actually, in those winning trades, you also might have signs actually of you're lacking in certain areas. So it's more evident that the losing streak is going to come. That's another topic, but when we then have a losing streak, it's very natural, or it's human nature almost, to think, well, I'm doing something wrong. I should do something else. And that's not necessarily the case because the probabilities don't change. In that certain condition, they might change, but the probabilities are still the same overall. So it's very dangerous to start switching, of course, but that's already quite clear. But it's very normal to have a losing streak larger than 6. Even with an 80% win rate, you are going to experience large losing streaks. And I believe in over 100 trade sample size, you might still have a losing streak of 7, even 8. That's normal. And that's probabilities. That can happen. Yeah. In the worst case scenario, that can even become higher. And that's why risk management will keep us in the game, because we can have an 8 losing streak right there, but we can essentially with 2 winning trades, once we start the momentum going again, we can recoup all those losses right there. As long as those 6 losses or 8 losses or whatever it may be, those losing streaks don't end up being minus 8%. That's very important. For the first trade, yes, might be minus 8%. It's at minus 1% loss, but we don't want to let that go even below 5% drawdown. That's already a lot. That's very important. It's also very true, Leo. Now it's hard to find the correct information, right mentor. Once you get through that, my biggest issue at first was patient, waiting for confirmation, understanding, don't just trade just to trade, better to wait for just patience. It's a big topic actually. That's very important because I noticed that a lot actually, where people, they come into the mentorship, they understand the concepts somewhat. They understand the concepts. I do believe I need to mention the probabilities more, because I think that's very important, that everything we do is based on probabilities, and that takes away some of the aspects of understanding that every fair value gap, for example, is a fair value gap that you can just simply trade off of. That's the top of the iceberg. As in, you have a fair value gap, wow, that's an interesting fair value gap, but there's a lot of nuances that go into that. It's different probabilities that we're working with. It's all kind of different things. It's very interesting. Very interesting. Finally seeing the profit of the week for this week is patient. The more I make being patient, the easier it is to be patient. I love that. I love that. Yeah. And oftentimes it's just patience. It's a lot of patience. A lot of patience. And the best trading for me also happens when I look at a chart and I think, oh wow, there's an opportunity all of a sudden here. And I get involved, it takes 5 minutes of work, and I go about my day. But when I start looking at the chart and I need to focus, or need to force an ID, focus always, but I need to force an ID, then I need to be more patient. Time will bring us the results. I truly believe that. I truly 100% believe that. I agree with Arjoios not for the week. That's very true. Very true. Very true. Very true. Well, there's different types of people, and I think everyone here understands the fact that trading, eventually you want to get some results. And I think everyone here as well, and that's also a big target audience of mine, I would argue, is that it's time to get some results. It's time to actually start seeing the fruits of our labor, essentially. And I believe a lot of traders are at the beginning just not ready for that. You're just exploring a lot of theories. You're jumping from one thing to the other thing. And at least in my experience, I was eventually sick of that. And I was like, all right, I just want results. It's time to actually get some real results right now. And that's very important. You should roast us more. I'll do it in a nice, polite way. But if I have to mention something, then then the Dutch comes alive in me, the directness. The example Arjoios is saying is the same self-sabotage we as humans need to identify, cut it from the deep roots. Very true, very true. Thank you. Is donkey hitting a stone a Dutch saying? Yeah, it's very much a Dutch saying. It's in Dutch, you have a lot of different sayings in Dutch, but in Dutch we mention a lot of times a donkey doesn't hate. Well, I don't know. It goes very deep, but a donkey doesn't hit the same stone twice. Yeah, that's a Dutch saying. I'm not sure actually if it is an English saying per se. I'm not too sure, but we use it a lot in Dutch. Yeah. It's basically about a donkey learns from its mistakes. For me so far, the hardest thing is to build a detailed trading plan with the least amount of concepts that I can backtest, that I have clear areas of waiting, clear areas of execution. When I apply all concepts, I would think that entry and end up not doing anything or forcing one. The mechanical part is taking some sweat, but I will get there. I do agree with we have the right knowledge, and I just need to line up to get there. Yeah, very true. And I also think, again, in a lot of things, so even if I do say, like, we just need to stick to things, etc., I have a lot of responsibility in that as well. So if you can't apply the concepts correctly, if you're struggling with that, then you can also take an eye at me, as in, am I doing my job correctly, essentially. So that's very important. And I do believe as well it's time for some kind of enrollment, not necessarily a whole new enrollment, but just maybe a video alone where we can clear up, all right, focus on this first. And then once you have an understanding of that, you can then build, for example, the understanding of how resistance works into the mix, into your trading plan, etc. If you want to get even better results. But focus on one thing first. I think that's very important. But yeah, you'll get there. 100% for sure. Honestly, I feel like I'll sign a paper if I have to. Arjoios Goggins. Oy. It's all because we say we care about money, yet our trades show we don't. The question I'll have to ask myself, like I say, yes, I want to do this and be profitable, yet we will blow profits at times, showing myself I clearly didn't care much. That's very interesting. I never thought actually about it through that lens. That's very interesting, actually. Yeah, that's a good one. I like that one a lot. That's very interesting. Yeah, it's a very good one. This speech by Ari will change your life with emotional music in the back. Ay. I hope I never reach that point where on YouTube I'll have dedicated channels with this Arjoios Twitter space will change your life, and it's just me screaming and ranting. Ay. It's very funny. Yeah, no, donkey. Yeah, donkey. Yeah, donkey. Let's see. Can we review high time analysis for SIGBU? I thought it was looking very strong this past week with both monthly and weekly bullish context and with GBP red following news during this week, but it ended up disrespecting the weekly for Viking. Let's see. Let's take a look. So the main thing here, and even before we go over this currency, the reason why this failed is mainly looking at the dollar as well. So the dollar right here at this moment in time is still bullish. So we had a lot of bullish arguments for the dollar, etc. That never really changed. So we need to understand that correlation, because yes, we can trade a currency on its own and we can get to a good understanding of what it wants to do. But in situations like this, quite rare situations where we have different contexts as the dollar will win. And that's simply because the dollar is the world reserve currency. So basically in current times, that might change, of course, everything revolves around the US dollar. So GBP and whichever currency we might think of, they will just do the opposite thing of what the US dollar is doing. So right here, if we then take that into account and we look at this from a different light, we have this weekly value gap, which we could potentially continue higher off. And we do indeed as well have the monthly context right there, which is very interesting. So just looking at GBP, it's very interesting for sure. Then on the daily, we struggle to continue higher. We have daily value gaps coming into that weekly value gap right there. And then from here on out, it's just a matter of, okay, what is the dollar doing? Because if the dollar right there is actually going to continue higher and it has more odds to continue higher, then this weekly value gap right there will be disrespected fully, if that makes sense. So that's the main reason. And then afterwards, we can see right here that we start to fill. So it does look very good at the beginning. Then we start to fill everything. And we actually target this fake bottom as well right there, if that makes sense. Let's start off with the dollar. Well, it could be interesting, you know, if you clip and you put it on YouTube, to get the expectations right for traders. I believe that's a huge part in trading. Getting the expectations right. I believe that's where everything goes wrong nowadays. Your thoughts on this? We could possibly go higher, but we are currently in resistance. I was actually looking at that because I do quite like the fact that we have this daily value gap right here. So we are in resistance. That's correct. But we do have this daily value gap right there. So if we get, I'm not sure what news is doing for next week, but if we get good confirmation of that, etc., then it could be very nice to continue higher. I do like that. So the resistance here is just the catalyst to create the value gap right there, to the retracement, to then continue higher off of that. Other than that, I'm not too worried about that resistance to the left right there. It is also a weekly value gap. Okay. Something we have to take into account because then we might consolidate a little bit more. Since now it's becoming very similar to, for example, GBP US dollar, where if we have this weekly value gap and it's on the time frame above us, which we can potentially continue lower from, and we have this daily value gap right there, then the premium rate is supposed to be stronger. So we might see a little bit more of a consolidation. So I would like to wait for more confirmation right here to continue higher off of. Pablo Escobar theme playing in the back. Week was a bullish trading week. Friday it swept the Thursday high and trend reversed. Why I say it's not a thank God Friday setup? Because Thursday did not make the high of the week. So if we take a look at Nifty, then Thursday was not the high of the week. And that's what I would ideally would like to see if we are talking about thank God Friday setups, where Thursday is the high of the week, which in this case was not the case. We also don't have opposing resistance right there, as in we're at an all-time high, so it's not too sure if we are actually going to get a rejection, etc. Other than that, I would also refer to the video that we made on Thank God Friday setup. It's in the finishing touch. But the main reason is Thursday is not the high of the week. It's still a good trade, don't get me wrong, but Thank God Friday, it would be named differently, essentially. Some rough loss this week, but risk management have been good, which has kept me in the game now. Now, obviously, with profits, the drawing gets to break even, our trails, and it's still full challenge with some good risk management. But if you can look back, okay, proud of the risk management, then you can say, I'm on the right track. Exactly. Focus on delirium and stop loss at the intermediate low, because this with that, then worry about adjusting stop based on short-term low, etc. will only hurt your mental seeing stopped out and then move on to hit take profits. Yeah, I think I also have a huge factor in that I, because of course we can look at more things in the form of resistance, etc. But when someone is starting out, resistance is not your main concern. It is indeed just focusing on clear delirium. Can we even find a clear, good, high probability fair value gap to then have a stop loss indeed at an intermediate low, for example, just gaining that experience. It's very, very valuable. Fully agree with that as well. Yeah, and the risk management as well, what you mentioned with those prop firms, I do believe as well that's going to pay off in the long term. As in, of course, the trading is not nice, but it's going to help. You're going to be even more strict. You're going to be very good with your risk management. I like that. Should clip this section for MT anyway, just to refocus us every now and then. Yeah, that's a very good one actually. That's a nice one actually. It's a good idea. Let's see if we can do something with that. On Friday we had a US dollar. Hello, ladies to MT by the way. On Friday we had a US dollar JPY 4-hour bullish gap, and we had a 15-minute sharp turn from it, but there was still some 1-hour resistance. We know that 4 hours is stronger than 1 hour. But when would you just enter on 15-minute ST, and when would you wait for 1 hour to fill before entering? Really good question. And we discussed this a little bit earlier as well. where so the thing here, so to put this right, if we have this 4 hour value gap right there and we have 1 hour value gaps going back into it, I would already want more confirmation. So 50-minute ST is a standard confirmation type. And what I mean by that, it's a minimum confirmation type. 50-minute ST or 5-minute ST plus re is the exact same thing constantly. Now, then it becomes a question of, can we go break even on a 50-minute ST earlier on? So on the 50-minute, we have this 50-minute sharp turn right there. Let's see where the 1 hour fair value gap is right here. We have this 1 hour fair value gap right there. Let's see if we are actually shorting or longing into the resistance area. Yeah, well, we are essentially right there, longing into the resistance area right there. So if we have this scenario, either I want to enter before we have reached the resistance or afterwards. So what I mean after, if we now get a stick entry off the 50-minute sharp turn, then this could be interesting right there, because now we've disrespected the 1 hour fair value gap essentially. So either I want to enter before or after reaching that resistance, because if we enter like this right now in hindsight, yeah, plays out beautifully. But this might as well be something like this, where we get a deep retracement. Now all of a sudden, it can still play out, but it becomes very difficult for us to actually go break even and take that risk off the table. So that's very important to understand. And so other than that, in hindsight, it's a good trade, but I would still want to wait for more confirmation, either before the resistance entering or afterwards right there. But into the resistance entering, no, I wouldn't want to wait for that. But I wouldn't wait for the 1 hour fair value gap to fill. That's also, that's not necessarily the case. Because if the entry happened before reaching that resistance, I would still be fine entering that, if that makes sense. Does it matter what the indices did in the previous session before getting into trade? You trade New York session. Do you consider Asia and London before, or just prioritize the news? That's a very interesting question, and I've looked into that before actually. I've even looked into previous days sessions as well, what they did, etc. To me, it's not super relevant on what happens, as in the premium and discount rates that we leave behind. So for example, fair value gaps right there. Yes, I do want to take them into account. Now, one thing that is important, if London is a big expansion, or Asia, for example, it carries over to the next session. So what I mean by that is it's the same in Forex essentially. If Asia is a big expansion, has moved a lot, London has moved a lot, for example, then the next session will most likely start off as a consolidation. So as a general rule of thumb, if you're trading indices and you have AM session, PM session, if London is an expansion, AM session is going to consolidate, and then we have a new expansion again. So it skips one session. If Asia is an expansion, London might consolidate, AM session might be an expansion, PM session might be consolidation again. It goes on and off, essentially. So that's something to take into account. But other than that, it's not really relevant at that moment in time. No worries at all. It's not necessarily a big fall, I would say. But it was still a good trade. Still overall good trading ID. I like it. With this US dollar JPY entry, where would you go break even? Would the 5-minute fair value be enough for you? Let's see. So this is actually a really good topic as well, because this is something that I want to look into more. And what I mean by that is the higher time frame delivery here at this moment in time was quite clear. So if the lower time frame is not picture perfect, then there's no real point in going break even oftentimes, because break even oftentimes also leads to a missed winner. I feel like if we go break even based on the lower time frame alone. Now on the 15-minute right here, if we just look at the 15-minute, I would argue we might actually be able to go break even as soon as we have this up candle right there moving above that high right there. That's actually arguably a really good break even right there, where I would most likely mention as well, you can go break even right there. But since it is a lower time delivery and we do have a higher time frame already agreeing with the ID, we can also keep it open a little bit more, because here our stop loss is in a really safe place right there. It's in a really safe place right here. So if this fills, then the whole ID fills, the whole 4-hour flag gap, the dominoes effect essentially starts, and the whole thing fills. So here, going break even would ideally afterwards after we have clear fair value gaps going out of our previous fair value gap right there. If we consolidate, we do tend to consolidate and then still continue in the intended direction right there. So we can't always require picture perfect price action off of lower time frame entities like that. That's quite important, if that makes sense. But 5 minutes fair value gaps would not really be interesting. I wouldn't necessarily go down time frames right there to look to go break even or anything like that. All right, perfect.